Hello and welcome to our episode of FinTech Focus TV. We are coming live from Old Billingsgate at the EMEA Trading Conference 2023, and I'm absolutely delighted to be sat here with Gonçalo Lima from R3. How are you?
Very good, thank you. Thanks for having me.
Listen, it's a great show today, and R3 is a company I've been excited about for years. I think I first met R3 probably about 4 or 5 years ago, and I've been studying it for ages. We've just started working with you, which I'm really excited about. But it's a business that's been one of the stars of the industry for a long time. So I'm looking forward to unpacking that and seeing where you are and what's happening in the marketplace and going into a bit more detail on it. But before we go into that, Gonçalo, tell us a little bit about yourself and R3 as a business.
Thank you. So my name is Gonçalo Lima. I'm part of the R3 strategy team. I look after capital markets and digital assets. And before this, I was working in banking. I was a COO for FX for quite some time at Standard Chartered Bank, and before that, BNP Paribas. R3, more importantly. R3 is a very exciting company, as you said. We are in a specific space, which is enterprise DLT. The DLT stands for distributed ledger technology, which is an exciting space. Sometimes it's misconstrued as solely blockchain. DLT is wider than blockchain. And whilst we are quite aware of what's going on in the crypto space, we are much more focused on the regulated financial industry. And therefore, a lot of what we do is trying to ensure an open and trusted digital economy. And we try to bring regulated financial institutions to a digitized and tokenized economy.
And this is something which is very dear to my heart. I said beforehand that we've just done, at the end of last year, we did a documentary called The Era of Convergence. It's all about the convergence of traditional and decentralized finance. And in that world, I think just as we were finishing it, everything blew up in the marketplace, and there was the naysayers who were saying, "I always told you so." There was other people who were saying it's the end of the line. For me, it was always actually this almost accelerates everything we've been talking about. And it actually accelerates, in my view, R3 and its relevance in terms of what we're talking about, because we're not just talking about, I think everyone, as you said before, DLT and the underlying technology behind all of it is the exciting part of all this. And crypto is just a sort of headline in the world. We've seen hype serves and cycles of adoption and where people think it's going to happen and how disruptive it's going to be to the marketplace. But I think if you look at it at its core, the thing that's really been needed is exactly what got accelerated at the end of last year. And it's almost like an adolescence of the industry into if it's not too dismissive to talk about it as a grown-up space. And companies like you, I think, have always seen that and have been pushing towards it, and have been very much at coming from that institutional background to provide that sort of regulation and authenticity to the space. So that's what I think has been really interesting.
That's right. So we are not oblivious to what goes on. And actually, a lot of what we do is inspired by some concepts in crypto. So the DeFi is quite interesting. Some concepts of blockchain are very interesting. Of course, what regulated enterprises need is a bit more than that. So they need to know who they're trading with, and they need to ensure that the information remains private, which public blockchain in more nascent form doesn't allow for. So for us, everything that happens or that happened in crypto, we are of course not happy that a lot of people lost lots of cash. But as you say, it's a natural process. And what gave us a lot of confidence as well is that the failures that we see are not failures of the technology. The underlying technology is resilient. The underlying technology is actually very powerful, and it proves a lot of the concepts that we've been trying to push for. A lot of the failures are on governance, which is exactly what we try to do, is to work with very highly regulated firms. And yes, it takes longer. Yes, it's quite time consuming and resource consuming, but it's the right way of transitioning a lot of the FMIs, the financial market infrastructures, from their classic systems, legacy systems, into the new age where capital needs to move much faster. And we see that in projects such as DTCC with Project Ion. We are very happy that they're using our technology to build that project. And we see a few others. Central bank digital currencies is across the globe gaining speed. And we are very proud to have our technology in a lot of those solutions. To us, it's definitely the right space to be in. Of course, there's a lot of things that naturally we need to learn from the market and make sure that some of the infancy issues that are happening in crypto are not replicated elsewhere. And that's why our business sometimes is the less sexy, but built for the long term and for the regulated financial industry that actually are most of our founders. So we were founded by more than 40 financial institutions, and therefore we have that service to them to make sure that the technology remains sound for their businesses, which is highly governed, highly regulated, and making sure that value moves safely to where it needs to be.
I think that sort of like group of investors behind the business has always been pretty, that's what's made R3 stand out right from the start. And it's interesting you say it's not a particularly sexy part of the space, but whenever we talk to businesses and I'm talking to people about where genuinely exciting businesses are sat, R3 will always be in the conversation. I think that's really interesting, right?
That's great, Toby. And I think it's hard built, so it's something that we are very proud to be part of. But it's a day-to-day work, and a lot to be with the vision of the founding members and the team that has been growing around it. So yes, it's an attractive space. It takes longer than what people might think, and we are seeing some instances of people around this space that might struggle from funding perspective and so on, where we are very lucky to have a very strong financial position because of our founders, because of our very conscious cost management. But it's a space that constantly needs nurturing, and we work very hard to keep that space. What is interesting is that because we built some of that trust around what we try to do, we end up in very interesting conversations around central banks, around what should regulation look like. So we are almost seen as advisors in a lot of these instances, and which for us it's a privilege to be part of those conversations, because for us as a startup, we are still a startup converging to become or coming to a point where we might be more than just that, but we are still a very new business, but we are part of very relevant conversations within the industry and with institutions that are quite relevant for the financial markets system. So we are very proud to be.
And that's your space, isn't it? The capital markets industry. I find it really interesting because, as I mentioned beforehand, I heard your chief economist speaking out in New York last year at the FIX conference. You guys are here. I think you've spoken earlier on as well, haven't you, on panels? To see R3 deeply embedded within this FIX community is a really interesting sort of play. Talk to us about your relationship with FIX.
So FIX, we are part, for example, of the post-trade work streams, digital assets, and so on. Of course, we are strong believers that FIX had a massive disruption in '92 when it was started, and then we saw a massive progress of the financial industry, and we now moved to nanoseconds a lot because of the FIX protocols and because of the messaging efficiency that was achieved. Our vision is that the next level of FIX is actually we don't need to replicate all those messages and bring those messages to siloed systems and siloed central points. We actually can have that information in a layer, in a ledger, shared ledger, where we make the whole end-to-end much faster and much more resilient. So FIX managed to reduce a lot of errors, for example, because people are now talking the same language. What we now need is that people move to the same book, and that's our vision. Is that FIX has a great thing that it allows people to standardize what the asset and movement of the asset. What we can add to that is a layer of understanding where you don't need duplicative processes. You don't need to spend a lot of cash around your operations, or you can actually reduce a lot of the cash that you spend around your operations to focus on what matters. And what matters is capital allocation, moving it to T+1 is a significant thing that Fix also enables because of the messaging, but to move to a T+1 settlement market, you need more than just that. People can settle T+1 now, but it's a very bespoke solution for some participants. What DLT enables is that you now allow for that to happen to a much wider audience, and what ultimately that allows for is the capital that you now spend for 2-3 days, you can now reallocate that 2 days earlier. So that it has a virtuous cycle that can bring a lot more business and hopefully putting the capital on where it needs to be much faster.
Yeah, that's exactly right. And the whole T+1 piece has been a matter of some debate all the way through today. And I think there's certain challenges, aren't there, that sort of happen over here in Europe that people are concerned about. When you touch on the point there about the technology and how it drives that, and how looking at it through a slightly different lens and where that positions you in your business, it's an extraordinary sort of piece. I want to finish. This is something I could be talking about for a long time. I want you to come back on the show and we'll do a much more extended one as well. But I want to finish a little bit on R3's position in this marketplace and who you can help out and who should be talking to you at the moment.
Yeah, thanks for that. So we want to continue to speak with the regulated financial institutions. That's our space. That's our base, and that's where we think we add more value. What we see is a context that is actually much more conducive of using this technology. The ESMA DLT pilot regime is a perfect example. The UK FMI sandbox will follow some of those things. The CSDR, for example, filed settlements are very punitive in Europe for now and in other jurisdictions. The DLT, our technology can help people reducing a lot of those errors because you no longer need to replicate systems, replicating data. And a lot of the errors are the wrong SSIs, wrong data. SSI stands for Standard Settlement Instructions. So by deploying DLT in parts of these processes, the end-to-end process, you can not only make the process more efficient, but also reduce significant systemic risk. And I think the context now, regulatory-wise and understanding-wise, is now the right time to use this technology to deploy at scale in some places. We are seeing that at the DCC. Before that, we saw, for example, the Italian banks with Spunta. They implemented Spunta to remove a lot of the reconciliation breaks and errors that they had. So we can see this technology being deployed at scale and solving real problems. Ultimately, enabling people to move to a token versus token economy. And we are also strong believers of interoperability between different networks, not only corded to others. Core is our technology, corded to other new networks that come up, like Ethereum-based and others, but also interoperability to classic systems. Now, a lot of the regulated financial institutions can't switch their tech stack from one day to the other. And they don't want to, they don't need to, but they need a layer that harmonizes all that data. They need a layer that reduces the speed and the reconciliation breaks between all those systems. So a lot of the projects that we are involved in are to bring that layer of harmonization of data, and therefore once you have data harmonized and shared between the parties that needs to be shared with, you can do the smarter stuff. So as soon as you have a complete data set for trades, you can start doing compressions, you can start doing clearing, non-clearing. Smart contracts is just the start. The beautiful piece is the smart workflows that you can build on top, and that's where real efficiency comes from.
There's a lot of excitement in that. Efficiency is one of the buzzwords, I think. I think you've hit on a few numbers there in terms of interoperability, efficiency, productivity. These are where I think 2023 is set, and it's companies like yours that I think are going to blaze the trail in all of it. So, Gonçalo, it's been absolutely lovely having you on the show. Looking forward to having you in and talking about it a little bit further. Thanks for joining us today.
That's great. Thank you very much.
And thank you all for watching. We will see you soon in another episode of FinTech Focus TV. Thanks a lot.